Hello, and a very warm welcome to you all. I'm Benjamin Simmons, head of the Green Growth Knowledge Partnership Secretariat. I would certainly like to thank you for joining today's webinar, which has been organized by the Association of Chartered Certified Accountants in partnership with the GGKP, and as you know, is focused today on fostering economic recovery through green finance education. We are extremely fortunate today to be joined by an impressive panel of global experts who will explore the need for education, training, and capacity building in green finance principles and practice. In thinking about this panel, I was struck by a tweet from the UN Secretary General earlier this week, where he stated in very, very clear terms that countries must align their COVID-19 recovery and stimulus plans with the need for urgent climate actions by first, investing in decent and green jobs, second, not bailing out polluting industries, third, ending fossil fuel subsidies, and fourth, taking climate risk into account in all decision making. And what I found particularly interesting about this statement is the central role of finance in the actions the Secretary General sets out to ensure that the COVID-19 response contributes to both an inclusive and sustainable economic recovery and transition. I think there is no doubt that achieving this objective will require that financial sector professionals have both the education and training required to develop and apply sustainable financial principles, methodologies, and data, which is of course why this discussion today is so timely and important. Now, before introducing the keynote speaker for today's event, I did want to mention that just over a year ago, the GGKP launched a green finance platform to provide professionals with easy access to the latest information, studies, tools, and educational materials related to green finance. The platform also includes a database with summaries and links to 460 green finance measures from over 70 countries. I would encourage you to visit the site at greenfinanceplatform.org. We hope the information collected there will be useful to the outcomes of this webinar and the ongoing efforts to support sustainable finance. A few very short comments on webinar logistics. First, we hope and anticipate that the webinar will lead to a very lively discussion and strongly encourage you to make comments and send your questions through the questions box. You'll find this towards the bottom of the GoToWebinar toolbox. And I really do encourage you to take this opportunity. It's a great way to engage with the panel of experts. I'm also pleased to report that a full recording of today's webinar will be circulated to participants, and the slides will be made available on both the ACCA and the Green Finance Platform websites. Finally, I am pleased to let you know that the webinar participants will be receiving digital participation certificates from the ACCA. So this is great news. So now, without further ado, and to get things started, it is my great pleasure to introduce our keynote speaker, Heidi Hautala. Heidi is a Vice President of the European Parliament and former Minister of International Development and State Ownership Steering of Finland. In the European Parliament, Heidi currently has many roles, including serving as a member of the Committee on International Trade, the Subcommittee on Human Rights, and as a substitute member on the Committee on Legal Affairs. Heidi, we are thrilled to have you join us as a keynote speaker, and I am pleased to turn the virtual podium over to you.
Thank you very much, Benjamin. I cannot express how honored I am to participate in my first green finance education webinar, because indeed I think we are facing a situation where we have to make everybody from citizens to enterprises and investors aware that they can make a big difference in terms of investing and placing their money where the footprint is positive for the environment and climate and society. So I would like to see this as a very encouraging situation, because at the same time when we are facing these enormous global challenges, we have been able to really move towards a systemic transition towards sustainability in the EU. And I can only mention that the Commission's President Ursula von der Leyen, she emphasized this systemic change, not just emissions reductions, which sounds very technical indeed, because this is really about systemic transition. So, it seems to me that the COVID pandemic, while it has made the work all the more challenging, it has also reversed the decades of positive development in many parts of the world, but it has also made us aware that we need to invest much more in resilience and sustainability and responsibility. So it could be that at the end of the day, this crisis makes us better prepared to face new challenges that I would suspect will be mainly and notably in the form of climate change, what that produces to us. But until now, there has been a lot of talk of the individual's responsibility and of the responsibility of states with regards to our global challenges. But however, there is an effort that requires all sectors, not least the financing sector, to take part. Otherwise, we will not succeed. At the European Parliament, we have done relentless work to have the private sector and finance sector fully integrated into the efforts towards a sustainable future. And I must admit that I have seen huge steps forward in these past 12 months. Steering the financing world to be fully aligned with reaching the Sustainable Development Goals is not at all a small task, and we are only at the beginning, but the start could be seen as promising. It is heartening to witness that various sustainability initiatives are cropping up and the demands are voiced by actors in the financing world. And I'm referring to, for example, to the Investor Alliance for Human Rights, which demanded in April this year that the EU will really put in place human rights and environmental due diligence legislation for companies. So we hear more and more support from the corporate world for due diligence of companies, because it's actually common sense. How can you invest in sustainability if you don't know what you are investing in? So due diligence is a way to show what the footprint will be. So for decades, private sector activity has been seen as simply generating profit for shareholders. But currently, we are faced with the necessity to make fundamental paradigm changes. I was very happy to see that, and even surprised to see that the European Commission some 2 years ago launched a high-level group on sustainable finance. This work led to an EU action plan on finance for sustainable growth. And now the EU has already in place the so-called taxonomy and disclosure requirements for financing actors. In turn, the financing actors will be needing clear, comparable and substantial information on companies' sustainability conduct. EU Commissioner for Justice, Didier Reynders, has stated that in 2021, there will be several initiatives seeing the daylight. The first one I mentioned is on directors' duties. Directors' duties need to be revised so that companies integrate long-term value and sustainability considerations in their overall strategy. Short-termism has become ever more prominent since the 80s, and this is in stark contradiction with sustainability aspirations. Secondly, there will be a proposal by the European Commission on mandatory human rights and environmental due diligence obligations. The EU wants to ensure that the companies operating in the EU internal market cannot shut their eyes on human rights violations and environmental damage that may occur in their global supply chains. Furthermore, and thirdly, this package will be complemented with a reinforced transparency element, namely the revision of the non-financial reporting directive. And it is indeed time to have harmonized and detailed requirements for substantive reporting on companies' environment and social impact. Companies still often have a tendency to see only one side of the coin. It is not alone the risks that these sustainability considerations pose on the company. At least equally important, I see, are the risks that the company's operations pose on the society, on the environment, climate, human rights, etc. And finally, it is high time that the EU puts in place European non-financial reporting standard, alongside the financial reporting standard. I'm very pleased to see that our newly elected Trade Commissioner, Valdis Dombrovskis, has been in the heart of this work from the beginning, and I'm confident that he will also find ways to incorporate sustainable finance in our trade policy. So we're talking about very fundamental changes, and it will be of paramount importance to communicate all these changes in clear terms, to enable the private sector and financial actors to digest what this all really means for them. All this demands a completely new mode of thinking for the private sector at large. The new pieces of legislation have to be brought into practice. It is an enormous task to disseminate the information, but this is a task that has to be done, and it has to be done successfully. So in practice, a lot of guidance and education on the environmental, social and governance ESG impacts and their measurement is needed. Understanding the importance of cooperation and dialogue with a comprehensive range of stakeholders needs to be strengthened. It is through dialogue that an undertaking, be it a company or a financial actor, can gain an understanding of what is going on in its operating context. Awareness and increased understanding of the benefits also serves to enlarge the amount of proponents that are needed to successfully carry out these paradigm changes. Even if the rules are already in place, or will be in place, the rules in themselves won't make a change overnight. And there I see the importance of the discussion we are having here today. A wave of positive developments has taken place, but it is an enormous task at hand to realize them and to bring them into practice. I would also like to point out that what we see in this whole discussion is that there are quite great differences between EU member states regarding how advanced the national debate on these new requirements is, and this could also be an important challenge for education. We see that France and the Netherlands already have legislation in place concerning companies' duties towards human rights and the environment. Similar process is underway in Germany, Finland, to name a few. But there are countries where this discussion has not yet surfaced at all. The existence of legislation or the complete absence of even a debate on the need for such legislation serves to indicate the overall awareness in the society concerning the need to recalibrate the private sector's and notably financing sector's role. These stark differences require careful thinking on how to construct and adapt the message, as I am sure you are all more than well aware of this. So finally, climate change and biodiversity loss and the global crisis of slavery and child labor alongside other human rights violations demand action. Greta Thunberg has been striking for over 2 years now. There are experts today discussing this task at hand, how it will be successfully carried out. And I trust that this is an endeavor that we all see as of crucial importance. This is a common planet, common humanity, and as we well know, financing plays an enormous role in steering our societies. The financing sector should be at the same time enabled and required to serve the purpose of achieving a sustainable future for all on this planet. I thank you very much, and I'm looking forward to hearing the discussions today.
And thank you very much, Heidi, for this very interesting keynote. It really, I think, helped to jumpstart the panel discussion that will take place now. I won't try to summarize everything you've said because it was extremely rich, but just a few, I was diligently taking notes, but just a few key takeaway points from my side. The first one where you discussed really the idea around systemic transition, the importance of having a systemic transformation, that was very, very insightful. And related to that, the clear need to create harmonized requirements for company reporting. I think that hopefully that's something that the panel will get a chance to discuss in detail today, and the need to create non-financial reporting standards as well. I thought was very interesting. And then just your conclusion on the importance of taking all of the commitments that we've seen, whether they're from governments or companies, and actually doing the work and the hard work now of really communicating that, of outreach and creating full understanding of what those commitments mean. So thank you very much, Heidi. It's now my pleasure to introduce the moderator for today's event, Jimmy Greer. Jimmy is the head of sustainability in the Professional Insights Directorate at the ACCA, our partner for this event. Jimmy is engaged in global research and advises on policy issues for ACCA related to sustainability, social impact, and business futures. Jimmy, it's a great pleasure to turn the webinar over to you.
Thank you so much, Ben, and thank you to Green Finance Platform for the great collaboration that we've been engaged with you in recent times. And I look forward to more in the future. It's great to be able to work together on these really important issues. And thank you. Your summary of Heidi Hautala's speech, I think, was a great step, and it sets us up so nicely for the panel. That link between green and climate and inclusive human rights. I think, you know, COVID has brought this completely to the fore, that the two are absolutely interconnected. And thank you so much for your leadership on these issues, on bringing human rights into the whole sustainability agenda through the action plan. Heidi Hautala, that's absolutely fantastic. So onto the panel. I don't want to speak for very long, so I'm just going to give us enough time to have enough time for all our panelists to have their share and for us to have a debate. I urge you all to, as participants, we're going to make this as valuable for you as possible. So please share questions as we're going along. That's going to be really, we'll bring them in at the end and have our Q&A session. So on to our first speaker, Geraldine Ang from the OECD. Geraldine, I believe you have been able to join the session. You are Senior Policy Analyst, Green Finance and Investment at the OECD. You are looking at all of these issues across so many different dimensions and different partners and ways of building capacity. We'd love to start off the session by hearing from you. So I will hand over to you.
Thank you very much, Jimmy. Can you hear me well?
We can indeed.
Perfect. Thank you. Thank you a lot, and for the introduction, and then to Cecile and ACCA for the invitation. I'm really glad you're organizing this event today. I must say that this is really a critical issue emerging that is not given the right amount of attention, I think, in recent years. So this is really excellent to hear. Maybe two main points I will make as an opening statement. The first point is that, of course, there's a gigantic priority to build capacity and educate financial stakeholders and financial professionals, whether to assess, understand, or manage climate risk, but also broader environmental issues. And if you take climate change, for example, the financial sector has a critical role to play in assessing and managing climate risk. And to start with the good news, I think, we've seen that an increasing numbers of central banks, of financial supervisors, investors, and other stakeholders are increasingly building capacity and educating themselves, whether to develop climate scenario or climate scenario analysis and stress tests to better assess climate risk, and especially physical and transition risk. And of course, we have to acknowledge that this is partly thanks to a transition in thinking amongst investors, thanks to the TCFD, and also since the Paris Agreement, of course. But it's also thanks to a momentum amongst financial regulators and supervisors, thanks to the network of central banks and supervisors for greening the financial system and GFS. And I have to say that no one, I think, would have predicted such a momentum maybe 3-4 years ago. So this is very optimistic and encouraging to see that finally the financial sector is taking ownership to build rapid capacity which is needed to address climate risk. If you take another sector like ESG investing, it's also very rapidly improving. You know, there's definitely a risk of greenwashing across the ESG industry, with the need to improve methodologies, the need to improve metrics and criteria. Of course, this is a challenge for SMEs that lack capacity, but I think there's a progress here. And we've seen, for example, that you know, tools like taxonomies or benchmark standards can help improve market transparency, market clarity, market integrity. But of course, much more is needed, I think, to educate on the actual investment strategy and investment mandates that are critical not only to assess climate risk and ESG risk, but to manage them. And I have to say that early September, we held a workshop, virtual workshop at the OECD with around 500 participants, with climate scientists, climate modelers, but also financial stakeholders, to discuss key issues surrounding the design and use of climate science and modeling by the financial sector and other actors. And it was very encouraging to see increasing capacity building to assess climate risk, and also to understand, if you want, the deep uncertainties associated with climate change. You know, it's non-linear, it's complex, it's forward-looking, etc. Where I think that there's a gigantic gap right now is for biodiversity. If I can quickly speak on that, I think that there's really a need for the financial sector to rapidly build capacity to better measure biodiversity factors, not just risk, but impacts as well. And of course, there's been progress in the past year. So last year, the OECD launched a report on biodiversity, finance, and the economic and business case for action at the G7 environment meeting in May 2019. And since then, a lot of momentum is happening, including with the launch of the informal working group of the Task Force for Nature-Related Financial Disclosures, TNFD, to which many of us today are members. But I think much work remains to educate and build capacity on how to measure and integrate biodiversity factors in investment decisions. So if you want, that's the first priority. The second, that I will go just in a minute, is of course there's a gigantic need to educate savers, consumers, and citizens on green finance and investment, and to trickle down all the financial commitments and green finance commitments from banks and institutional investors in actual products, whether green loans, you know, whether for your car insurance, for your car loan, for your life insurance policy, for a range of green funds that needs promotion. I have to just mention that the OECD has a financial literacy program, and that team has been working over the past 14 years to improve financial literacy. So they have a network of international network on financial education with public institutions with expertise in financial literacy in around 130 countries. And there is a draft OECD recommendation on financial literacy that is expected to be adopted by the OECD Council in 1 month, exactly on 6 November, to promote understanding of the implications of saving and investment decisions on society and the environment, and of long-term economic and financial sustainability considerations in saving and investment decisions. And I think this is a critical area that needs to be explored forward much more by regulators and policymakers. Thank you, Jimmy.
Thank you so much, Geraldine. And just the range of things you mentioned that the OECD is involved in and pushing forwards, I think is just absolute testament to the work that's been going on. And as you mentioned, almost would we have imagined that this would have been picked up to such an extent so quickly? And you know, all actors are working to build the capacity for skills and literacy. And with that, I'd love to, delighted to move on to Helen Brand, ACCA's Chief Executive. Helen, it's so great to have you join our session today, and it'd be great to hand over to you and to go through some of the things that our members, our future members, professional accountants, and us as a body are really looking at in this space.
Thanks, Jimmy. And firstly, can I say how pleased I am to join everybody today? It's already been very informative and very inspiring. I think we all agree that the issue of green finance now has real urgency for all of us across Europe and indeed around the world. And despite pauses in economic activity brought about by the COVID-19 pandemic, climate change is still accelerating. The 3 largest economic losses on record from wildfires have all occurred in the last 4 years. Biodiversity is still disappearing at an increasing rate, and with just a decade left to deliver the UN Sustainable Development Goals, urgent and positive progress is required, because if action is not taken, we risk destroying our entire habitat within our own lifetimes. Now, that's not to say there hasn't been important foundational work we can build on in terms of business rethinking its purpose. So as far back as 2012, Larry Fink began issuing his annual letters to CEOs globally, articulating the broader and higher expectations from their investors. In 2016, the CEO of BlackRock built on this by asking that every CEO lay out for shareholders each year a strategic framework for long-term value creation. Then in 2019, the influential US Business Roundtable published its statement on purpose. This outlined that while each company served its own corporate purpose, they also shared a fundamental commitment to all of their stakeholders and to the planet. In the statement, they committed to supporting the communities in which they work and to protecting the environment by embracing sustainable practices across their businesses. Now, the problem is that all of this hasn't translated into action at the speed and scale needed to protect our planet in the time we have left to avert irreversible catastrophe. It is a cliche, but it's true that what isn't measured can't be managed. So a properly comprehensive system of corporate reporting is part of the solution. One impediment has undoubtedly been the lack of joined up thinking across the corporate reporting ecosystem itself. So last month's announcement that the main framework and standard setting bodies, CDP, CDSB, GRI, IIRC and SASB are working together on a shared vision for a comprehensive, globally accepted corporate reporting system. And that's an important step, as is the IFRS Foundation Trustees' new consultation on the establishment of a Sustainability Standards Board. Because sustainability is a truly global challenge, then the solutions we develop do need to be global. Professional accountants, of course, lead on corporate reporting, but their role and value to addressing the issues go well beyond the field of external reporting. Professional accountants have a unique view across the organisations that they work for and advise. They have the potential to perform a range of vital tasks in rethinking business to support the mainstreaming of positive impact and to foster a sustainable recovery. They can help transform the way organisations perform by supporting product and service redesign, establishing the systems and processes required to propose, create and capture multi-capital value, and using their skills to help organisations understand, measure and manage their impacts. They can do this by providing advice in a rigorous way that's fair, balanced and concise. Their understanding of criteria needed for governance and interpretation of new sources of data, their rigour applied to reporting, the credibility they provide to assurance, their ability to reimagine business partnering to create impact, and their understanding of potential roles for different technologies could all be deployed to support this transformation. And we recognise that as their professional body, ACCA also needs to enhance and accelerate the support and commitment we provide to this effort. This is why in June this year, ACCA was among the signatories of the world's first Green Finance Education Charter in the UK. This commits us to incorporating green and sustainable finance principles and practice into our education and training programs for professionals worldwide. And because action needs to be swift and decisive, there are clear milestones we've undertaken to meet. So by December 2020, we've committed to engage our members on issues related to climate change and the environment, to create, develop and promote relevant resources to our members on green finance, and to encourage the adoption of relevant global and national standards, frameworks and guidance, including principles for responsible banking and insurance and the Task Force on Climate-related Financial Disclosures. By December 2023, we will have mainstreamed the principles and practice of green finance into our programmes of both initial and continuing professional development. The good news is that there is no lack of awareness or willingness on the part of our members to commit to this. This week, we've released a new report from Jimmy called Mainstreaming Impact, Scaling a Sustainable Recovery, as part of a 3-month focus on sustainable business across all our outreach activities. In this report, 90% of the members we surveyed globally supported the suggestion that organisations must increase efforts to become more environmentally sustainable and make more of a positive impact on society after the pandemic. So by working with them, our members, and through them, we intend to make a major contribution to delivering transformation at the speed and urgency that's so desperately needed. Thank you, Jimmy.
Thank you so much, Helen, and thank you for raising those important issues, those different roles that the profession can play. It's just sitting in that role and having that unique view and having all those different ways to make an impact. I think that came across extremely well. And thank you for mentioning the report as well. I must say the process of the putting together the report and engaging with members on it was really affecting. They really care about these issues. They want to do something now and into the future, and they're ready to do it. They understand the barriers. So yeah, thank you very much for mentioning that as well. I urge you all to download it immediately. Now moving on to our next speaker, Tom Verhave. So pleased you're able to join us, Tom. It's an absolute pleasure to have you here. From the European Commission, Principal Advisor of Green Finance and Investment. Tom, when we've spoken over the years, and Helen mentioned the Green Finance Education Charter, it's like a light bulb moment. Like, this is exactly the kind of thing that we need to be seeing from professional bodies and others who are doing this thing, and it's so exciting to see your reaction to that. I'm going to hand over to you now to share your views.
Yeah, can you hear me?
Yes.
Can you hear me? Okay. So first of all, good morning, Jimmy, all colleagues on the panel, and everybody else listening. Apologies for being late. It was quite an IT nightmare, but here we are. So I hope to catch up quickly, and I apologize for having missed some of the messages, but I know you quite well all around, so we should be singing from the same hymn sheet, more or less. Already, like Ellen was saying before, just a few kind of scene-setting considerations. Green is clearly hot today, very hot. Awareness about environmental risks jeopardizing our economies and societies at large are sky high. Yet, if we look at the reality and the share of the economy that is green, we're not really going beyond 2–3% for the moment. So between 2–3% and 100, there's a very steep pathway to climb, and there's a lot of work to be done. So we know also from studies done by many groups, including some that are here represented, that a poor understanding of our environmental risks and opportunities is amongst the big things to blame for that low level of green in the economy, and not least the lack of methods and metrics to measure and manage all these things. So that's why, again, we're in very good company when we are hosted by accounting organizations. So many concerted actions are needed to get us from the 2 to the 100%, and allow me to make a little bit of publicity for the Green Deal, which I really believe is a landmark in the policy world for taking all these concerted actions together, and it would be too long to list them all. We really need to work on all fronts, not least at the level of education and training, and I extend that also on the basis of what I heard others say to the capacity building very much. So education, training, capacity building, here the topic of today, it should really focus on making sure that we obtain a better understanding of our relationship with the environment, be it as individuals or corporates, because I would like to focus on corporates again. It's a huge community that we have yet to fully mobilize behind the green agenda. And not only in terms of what is the impact of the business on the environment, but also what is the dependency of the business on the environment. That's a very powerful double relationship that is embedded not only in the non-financial regulation, reporting regulation, but also advocated very much by the Capitals Coalition. So, as I said, when we're grouping accountants here, we could catch a few birds with one stone. My biodiversity colleagues may not like that expression, but a few things on the how. I mean, I've been advocating for a number of years now that we work, and I would like to see the other slide if possible, that we work from a comprehensive logical framework that basically captures all the elements of the natural capital on the one hand and separates the ends. So what it is we need to do, we need to reduce the footprint, and then going forward, we need to do that deploying all kind of means that we have called resource efficiency, pollution prevention, circular economy. So all these things we need to capture in one go. And therefore, what I think is important is that we also, not uniquely, but we also focus our training and education programs, capacity building programs, a lot around the natural capital accounting programs that are taking shape, and for which we will hope to soon deliver a new set of principles and guidelines through the transparent project that we have launched in the Commission, and where we engaged leading partners such as the Value Balancing Alliance, the Capitals Coalition, and the World Business Council. Other sources may come in, may be also very useful. I mean, a number of frameworks were mentioned and they're extremely relevant. We can look at taxonomy and many other things. But that said, perhaps on a final note, I can say that colleagues, not only in the Environment Department, but also the Education and Cultural Department of the Commission, have already been working on making sure that training programs, capacity programs around this natural capital management accounting agenda and broader can be accommodated, but obviously that will depend on proposals coming up from the ground. Other funding programs, current and future, will certainly also cater for those things. So I have one message for ACA and everybody around the table: roll up the sleeves and develop programs, come forward with proposals, and I think the Commission will be able to accommodate those going forward. That's it for now. I hope that's useful for you.
Thank you so much, Tom, for sharing all of that and the commitment of the Commission and your sharing more on the new Green New Deal as well, which I think you know we need to sort of keep in mind at all times. And thank you for that offer at the end as well, that you are open and the door is open for us to do more and come to you and roll up our sleeves, because that's exactly what I think everyone's doing. And I think few organisations are rolling up their sleeves as much as CDSB, the Climate Disclosure Standards Board, and we're really pleased to have Mardy McBrien, their Managing Director, join us today. Mardy, I'd love to hand over to you and to share your views on the role of green finance and what you're doing at CDSB.
Thanks, Jimmy, and thanks to the other panelists. It's always hard when you go last on a topic like this where you agree with everybody else, so I'll try and add something new to it. So I guess there's no doubt about it, education is central to the green recovery, and this transition requires new ways of working, new ways, new information, new approaches, and new skills. And we have more than 20 years of skills built in sustainability teams around many of these issues. The challenge now is to evolve and integrate that skill set and apply it to key functions across the business as a whole. And we don't have much time to do that. And we need absolutely the best minds on it. It will require meaningful education, not just greenwashing. This needs to become business as usual for all organizations across Europe and the world. And this means professional bodies well beyond the accounting profession, risk, company secretaries, etc., all need to get their vast membership bases upskilled and future fit to support this green recovery. So we've heard about the investors and the capital market skill set from Geraldine and the OECD, and their need for decision, useful, consistent, comparable information to help finance this recovery. So in the CDSB Secretariat, we have the, I'm going to say, joy of reading lots of corporate reports, and especially around the non-financial reporting directive and the task force on climate-related financial disclosure compliance, to help further capacity build within different organisations across the world where reporting is falling short. And a key area of attention from a skill set perspective for the accountancy profession, we are seeing a big disconnect between the strategy, governance and risk performance with the financial impacts and performance. This integration of this key material, climate, environmental, social issues into the mainstream corporate report and considered alongside every financial decision made is really just not happening yet. We've seen recent push by the investor community globally to use the new IFRS guidance on climate note on climate change for their reporting this year. We've got a working group looking to answer the questions: how do I do it? What does it look like? You know, who else is doing it? But it's an area that I must say it is really really still just not getting there. I think 15% of 1,000 companies recently actually had some note in their accounts based on all of the narrative up front that said climate was a material risk, but there was no assumptions, no free cash, etc. I don't need to go on. Another key area skills-wise that we're really seeing falling short, that Heidi briefly touched on in her keynote, was governance, conversations around governance of these issues and getting the buy-in at the top. Would you believe, beyond the top 50 in Europe, we're still not seeing boards that are equipped effectively to engage in strategic debate about climate, environmental and social challenges for their business and how they will contribute to the EU targets and the green recovery. And if you just want to put a statistic against that, 3,000 companies were recently assessed globally on their governance, and only 16% had established processes to keep boards informed on climate issues. That's climate, not the rest of those issues. And less than 10% had factored climate change into financial planning. We still have so much further to go. So I think anything we can do to really integrate and make this business as usual and help move more than just the accounting profession on is going to be critical. And the accounting profession, I love it. I'm not an accountant, I kind of wish I was, but the history of accounting is a story of responding to new market demands and opportunities, challenges, expectations, and new legal requirements. This is nothing new for this particular profession that are hosting this today, but well beyond. Professional bodies are used to responding to change. And education, for example, can take into account existing competencies and aim to build and broaden them. So if you take IAESB's 2007 Handbook on International Education Pronouncements relevant for companies, we have management accountancy, governance, risk management, internal controls, business strategy and risks. These all could be expanded to cover the green finance agenda. So using things like using the principles of reporting to disclose ESG in reports. Sounds straightforward, doesn't it? When you say it, why are we not doing that? But this has to become business as usual. Using existing international accounting standards for disclosing climate-related information, accounting financial impacts, as we've said. There's a lot that can be done with what we've already got, right, and evolved and moved on. So in terms of education on green finance, where we've seen it most effective to date is where it's integrated into existing syllabuses, not where it's a bolt-on module. Because this is demonstrating it's a separate subject, not something that is dealt with across the business operations as part of day-to-day business. But of course, there is always, it's always good to have a grasp of the basic science of these things as well, just enough to make you dangerous when you get into a conversation. There are, and I'll just finish now with saying there are lots and lots of resources out there to help. We've heard about the Green Finance Platform from Ben at the beginning. We've heard about the ACCA resources. A4S have some great resources. We have some resources on our website. The TCFD Knowledge Hub has free e-learning modules, which are CPD accredited, that you can take anywhere between 1 and 2 hours, which we've developed with ACCA and many others on risk and governance and entry-level accounting. It's really worth having a look at some of these tools. Again, good start to make you dangerous to know what else you need to learn and what else you need to talk with about the business. But I can't say it enough. Get started, start asking questions and challenging all of us, to help meet your needs to move this agenda forward faster. Thank you, Jimmy.
Thank you so much, Mardi, for sharing that. And I think just to pull up a couple of things that you mentioned there, the TCFD hub that CDSB is a secretariat for has just so many fantastic resources. We were so proud to participate with others in building those e-learning modules. And I think a shout out to your team member, Gemma Clements, for the amazing work that she's been doing to get everyone's views and create that, which has really kickstarted a lot of processes and provided that foundation that we all need to go to the next step. Mardi, you mentioned a few things. I do want to ask you, there's a few things you brought up, and perhaps we're going to move to a Q&A now. But before we just bring it out more broadly, I mean, Mardi, Helen mentioned, and you mentioned as well, well, the standardization, the issue around standards. And we mentioned the group of 5 coming together with a new statement of intent. I mean, as a representative of the group of standard setters, it's CDP, CDSB, GRI, SASB, IRC that Helen mentioned, could you, for those that maybe don't know where this is up to and where this is going, and it's just such a critical path towards improving disclosure, Can you let us know a little bit about that process? I think it'd be really helpful to explain and fill us in on where that's going.
Sure, Jimmy. So, and thanks for mentioning it, Helen. It's really important, I think, at this point, that it's all about collaboration and getting that supportive stakeholder base behind this initiative, because I don't think the stars have ever been aligned so closely in this world. You know, I was joking earlier, I sent my first letter to IOSCO 10 years ago asking them to get engaged in this matter, and now they're holding all the standard setters to account every 2 weeks on a call, you know, to make sure we're progressing this. So the system is moving very, very fast, and what's most important is, for the first time, the 5 largest global standard setters working in the ESG space, although we've all understood how we've been complementary, I don't think we've been particularly good at communicating to the market how you can use each of us to stack up, to produce a comprehensive reporting approach and tell one clear, consistent story to the market, because that's what's truly needed now if we're going to mobilize the capital needed for this green recovery, and make sure we have those resilient businesses in place to help do that. So the statement of intent was designed to talk about how we all fitted together and lay the foundations for what could be a future work program for how we could continue to consider convergence around this particular reporting landscape. So it's about also making this simpler, making it more accessible for companies, and to support the rapid transition that's needed. And we are really delighted by the support we've had from IFAC, from IOSCO, from the IFRS Foundation, from yourselves at the ACCA, and the accounting community globally from that statement. But the next sort of moment, I guess, that you'll be expecting something. The pace is fast. You'll be pleased to hear, and you'll be expecting the next action focused output from this group in the middle of November as part of London Action Climate Week.
Okay, that's great to know. Thank you, Marty. And I think something you mentioned is really important for everyone to bear in mind. You mentioned IOSCO in there. You mentioned some of these other institutional players that are really important to actually making this stick and making it work. And I think that's really important to note. So thank you for mentioning that. Helen, I want to come back to you on the skills side that we've been hearing so much about. I mean, can you help us, share a little bit more about the sort of specifics of the support and guidance that ACCA is going to be is setting out across the members and future members?
Sure. I guess the first piece of good news is that in your report, Jimmy, over 50% of the professional accountants felt that they were already equipped with some of the skills that they needed to tackle these changes. So we've been doing something right. They find barriers in businesses, whether it's short-term focus on financial results, lack of resources, sometimes lack of support from the leadership in organizations, but certainly there's a basis there of being equipped. So specifically, sustainability is already fully integrated into the ACCA qualifications. So topics we cover already: biodiversity impact, environmental taxation considerations, financial reporting on carbon assets, and of course integrated reporting. And at our strategic professional levels, that's the final level of the qualification, we've brought in new content such as new business models, circular economies, and SDG disclosure recommendations. So some very specific learning and content there. Now, of course, that's all in the qualification. That's about members of the future and people entering the profession. So it's critical that we run continuous development programs for our members. So CPD events, initiatives, and we're putting a very special focus on that in October, and we're producing new learning every day just to give some impetus and excitement around this, which we know our members are very attached to and engaged with. So we're covering 4 key themes, and 2 of which is sustainability and ethics, so both very, very relevant to the field of green finance. And of course, we specifically advocate around all of the issues that have been brought up up to date. Specifically, of course, I'm personally very involved in and have been in the integrated reporting movement for a long time. And like Mardi, it's 10 years since I was wishing that everything would come together and that we get to the point that we are at today. And I do think that you know, we've seen great progress in the adoption of the concept of integrated thinking within businesses, leading to that integrated reporting. But the consistent and coherent application of the standards frameworks that are available within that framework is going to be such a big win for business, and of course ultimately for the planet. that I'm really delighted that we're now moving at pace towards that, and ACCA is advocating hugely with that movement.
Great, thank you so much, Helen. And I just to concur, you know, to see the movement around ACCA, though we're not all together physically, it's just you know, the pace is quickened, and we're just doing so much. And I'm just so delighted to feed into all the different things that are happening and moving. It's been really great to be a part of. And I think the thing you mentioned is quite interesting. There is that we highlighted that members feel they are equipped and they do have skills, and if you know that they need to build, they absolutely want to build new ones. They can see where they can apply themselves to these challenges. They just see it so intuitively, and I think that's great to see. And if you add in tools that exist out there, I mean, things even, for example, with Heidi here, you know, the human rights reporting framework, the auditing framework that sits behind that, the tools are out there, they exist, and you know, it's about agency, it's about resource.
There's a huge way to go, but there is a lot there that we can build on. I think that was the point Mardi was making. If we apply the capability to the right outcomes, then we make huge transition. So as you know, as one of the professional bodies operating globally, it's really our responsibility to ensure that everybody is equipped to do that.
Absolutely, and I think having COP26 as well out there coming around next year, there is a focal point that we can all work towards globally, and I think that really helps to speed capacity building as well. I now want to just come to Geraldine. Geraldine, you are here as well on the line. Geraldine, back thinking about the OECD, and you mentioned the workshop that you guys ran in September and the capacity building work you're doing across the financial system. How does and the financial literacy piece? I mean, how does can the OECD support sort of education from financial actors on climate science and the modelling piece? You know, we know that the scenario stuff is so important. Can you explain a little bit more around that? I think that'll be really helpful for our audience.
Thank you, Jamie. And I think the main point here is that it's about putting in the same table different communities that until very recently had never talked to each other. And you know, like climate scientists and modelers have been working very hard to address the complexity of climate change for decades. But now it's about them trying to bring that knowledge forward and the uncertainties associated with climate change forward to educate and build capacity for the financial sector, but also, you know, for climate policymakers and other kind of policymakers and stakeholders. And we held that workshop early September, and it was a bet because we were wondering, you know, it's a virtual format, there's 500 registered participants, are they actually going to show up, and are they actually going to talk to each other, because some of them are worldwide scientists that, you know, sometimes it can be very hard to understand things like complexity of climate modeling or socioeconomic impacts of climate change, etc. And it was fascinating to see that there was a strong willingness from the financial sector to really understand the complexity of climate change. And I don't want to undermine that point that, you know, climate change is forward-looking, it's non-linear, it's uncertain, it's deeply complex. And even though we have complete confidence, you know, that climate change is happening, we don't know yet, you know, what kind of tipping points may happen, what kind of uncertainty. And so there's really something that needs to happen in terms of climate risk assessment by the financial sector. So there's a bridge to build, if you want, between the climate scientist and modeling community and the financial sector. And I think the OECD can help there because we have both communities, but of course the NGFS has already started to play that role with the guidance that they've published and the climate scenario that they launched in June. And you know, like, we're launching that new series of workshops. If everyone is interested, we'll keep trying to organize those bridges. But I have to say that maybe to play the devil's advocate for a bit, I think it's great to educate on climate risk assessment and climate risk integration, but at some point we have to dial up the pressure, and we have to talk about management of risk. Meaning, once an investor has the right information on its portfolio, how can he manage the risk? And I think at some point at the workshop there was someone that said very nicely, we have to stop hiding behind lengthy climate scenario analysis. Meaning, I'm very supportive of building capacity for all those scenario analysis tools and climate risk assessments, but then it needs to lead into, okay, so my portfolio is on track for a 6-degree world. Can I really say that by just disclosing it, I've done the work? And I think there are many accountants and people involved in reporting listening to us right now. And I really want to play the devil's advocate that, of course, reporting is critical. Information gap is a critical market failure. But if we are looking now and saying that a disorderly transition happens if we do not act before, let's say, 2030 to shift completely our emission pathways, do we think that it's going to be sufficient? Of course, it's completely essential condition, but we need to go a bit beyond. And I really want to question everyone listening to us right now, thinking, beyond just improved reporting, improved accounting practices, there are some fundamental mismatch of time horizon in the way that financial sector and businesses operate. And for example, I'm speaking here completely on my personal capacity, but I think that governance rules need to evolve to make sure that short-termism is addressed by board and management. So that's one thing I want to raise. And the second that I hope we can maybe discuss later, but I think that for green education, it's about time that we tackle green lending, because as long as banks, I've worked for 10 years with institutional investors, and I think we've neglected the role that banks can play. And when you think about it, banks are issuing actual money whenever they lend to any one of us, for a loan because we purchase a house or apartment, for a loan because we want to buy a car. And I think it's about, or whenever we want to save our money and our dollars and euros hardly won, like, why don't we get offers for example, green funds and life insurance policies that have green, strong and robust and very robust green with exclusion policies, for example. So I think there's a really big gap in putting additional pressure there. I'll stop here. Thanks, Jimmy.
No, thank you so much, Geraldine. I think that not just on the retail, but just in commercial banking, when I think across our SME networks, actually green lending criteria across those different outlets throughout SMEs is a really important space that we're absolutely looking at as well. But on something you mentioned, actually, I want to bring in Tom here, because you're absolutely right. Disclosure it only gets us so far. Reporting only gets us so far. Tom, I think that and when we think about it in a planetary sense, about nature as a whole, it's not going to move things fast enough. And Tom, I guess that's something that you are very clear on as well. It's not just about the reporting. What about the change, the management change, the accounting?
Well, thank you for that opportunity to come back in, because I was listening very carefully, and again, I endorsed everything that was said before. Marty was saying something that I think we should keep very well in our mind. There is still a big disconnect between the massive increase in the attention to sustainability reporting and what basically goes through the executive level for really risk mitigation, risk management purposes. And that is where I was saying there's plenty of fantastic initiatives going on, and Marty was also referring to the consolidation efforts, which is great stuff going forward. We need to make sure that we're not overlooking the internal cost accounting aspect, the risk management accounting aspect. That is in fact where the natural capital management accounting initiative is focusing on. It's basically the inner shell of the onion that the natural capital is often referring to. If we don't focus on that one, it's basically we need to equip the accountants with the tools so that they can manage or measure, assess and manage environmental risks, and by extension social, but I'm now focusing on environment without prejudice to the importance of social, in a way that you do cash flow management, that you do net present value assessment. You need to have the same thing there. So what I'm find very important is that we fully engage the accounting world also on the internal management information system part. That is the missing link. That is why we're trailing at 2% and not get up to the 50, 60, 70 that we need. Once we fill that gap, and it is fully complementary with everything that was said before, we will be in business. And to my good colleague Geraldine again, climate is very, very important, but let's not make the mistake of steering companies solely in the direction of climate. Climate is of utmost importance, but for some businesses, their impact on the currency. So we should be careful that we're not setting up a system that steers them away from other natural capital risks that are equally important.
Jimmy, could I come in here for?
Yes, please.
Yeah, thanks. Yeah. Well, it's been fascinating to listen to everyone. I'd just like to make a couple of points. I think, first of all, I think one of the biggest educational challenges is to find sort of cross-sectoral answers to cross-sectoral horizontal challenges. And I think most of the people still think in very linear way, and they think in silos, and our administrations are organized in silos. So, you know, you have like economy, you have human rights, you have environment, you have whatnot, you have everything. You have a DG, the Directorate General for everything in the European Commission. But I'm also seeing that because of this EU Green Deal, I see that there's a lot of learning going on, and I think Thomas could confirm this, that I see much more sort of work in clusters to look across sectors. And my favorite topic here is how all the DGs are now looking into this future due diligence legislation. So that leads to me to my next point, is that we should really not just think that reporting is enough, as several of you have said. Indeed, I think what we're talking about here is corporate accountability. And there will be more accountability mechanisms, most likely mandatory accountability mechanisms. I can't promise for every company all over the world, but I think starting in Europe, and I think EU can become a sort of a, you know, it can bring about a kind of a Brussels moment, because, for instance, this information that the main reporting frameworks are now talking to each other and looking for a globally acceptable standard. It's fantastic news, and I think the EU could be the first to sort of start to apply that as a part of the non-financial reporting. And my last point is that yes, climate, environment, natural resources, fantastic, but we need to understand that there can be even trade-offs between, let's say, human rights and environment. My favorite example is, let's say, a dam project in Honduras or Guatemala. It's renewable energy, but it will wipe out an indigenous people. Do we want to do that? No. That's why I think some of us were very much pushing for the sort of social and human rights aspects to be a part of the taxonomy. But we were told, well, let's start from the climate. But I'm afraid this is all a little bit too one-dimensional, however important it is. So I think companies will need to incorporate human rights and social aspects to their environmental and climate aspirations. So that's all. I need to run, so I thank you all very, very much for an inspiring discussion, and I wish you all the best and stay in touch. Thank you.
Thank you so much for those comments, and I really appreciate it. I think it's a really good point that we should carry on here with, that, you know, this policy coherence around this next step, the Green New Deal, all of these areas. You know, I mean, we've done some research looking at national audit offices, supreme audit institutions, and the work they've been doing looking at the SDGs, and they will, you know, we'll see that the horizontal level of policy coherence is kind of okay. You know, Directorate General talking to each other.
Jimmy, could I come on a couple of quick
Yeah,
points? I just, because I do think that broader piece about that Geraldine brought up about reporting isn't enough is absolutely right, and the whole purpose behind, firstly, integrated thinking within organisations and integrated fraud is about that long-term value creation across all the capitals. And so I do think there is a way there that businesses can be held to account, in having to express how they create that value, utilising all those capitals that are so important that we've talked about on the panel, and then how they perform against that. So it's not a one-off exercise. This is a continuous effort within the business, and then the way that you can be held account through there. And the second point, which of course someone would expect me to say, but so I will, that professional accountants work in all sectors, so whether it's the public sector, corporate sector, in the firms themselves, and have that total view of the business. So there is a way to have a cross-cutting expertise within organisations that isn't siloed, and that does allow, you know, to bring together all of the attention that's needed in applying disciplines across all aspects of the business. So whether it's a different sector or the way the business itself comes together, professional accountants have a really important role there of being that glue and, you know, the guide that can make it all function.
Absolutely, and it's such an important point that that transformation happens from within the finance team in collaboration with others across so many different domains across the business. And thank you so much for highlighting that really important
Jimmy,
point.
could I react very quickly to? Thank you. So now I just want to echo very strongly points that Tom has made on the fact that we need to have an integrated approach. And when I talk about climate as an illustration, of course, this needs to be integrated with other environmental and even social goals, like Adi just mentioned, and she's left, but she stressed as well the importance to factor possible trade-off between other social and human well-being. And I think one critical thing that the COVID crisis is highlighting is the interdependency between, you know, health, economic growth, and massive risk linked to biodiversity. To give one example, linked to, you know, whether wildlife trading or massive deforestation that brings us closer to wildlife. And I think one approach is that maybe it was not the right approach when we started doing climate action 10, 20 years ago to say, let's align everything with climate change. I think now, and I was just listening this morning on the French radio to young French activists that work on climate, and they have an integrated approach between climate and social issues, between climate and feminism even, and other inequalities, racial issues, etc. I think that it's about time that we build a narrative that's around human well-being. And I think it also enables to solve the never-ending story when people are opposing green action and growth, because it's not about pure GDP growth anymore. It's about how to deliver human well-being in terms of development, social, etc. And I think that will make it very easy, if we build a human well-being approach, to push the climate agenda forward, to push the biodiversity forward, while pushing the social agenda forward. And I think Adi mentioned earlier the importance of, you know, due diligence. And I think at the OECD we have the M&E guidelines that many of you know as accountants, and the due diligence guidance for responsible business conduct. And more than ever, it is the OECD priority to really integrate those due diligence work across not just human rights, where it has been primarily used, but also environmental issues. Thanks.
Thanks so much. Thank you so much for that, Geraldine. I think, you know, the social justice side, the inequalities side is absolutely, it's got to be linked. We've got to be talking about it in the same breath. I've got a few questions that have come in now, and I want to I'm going to put a few out to the panel. Mardi, I think you know, we've opened a Pandora's box here with the statement of intent, and everyone wants to know what's happening and what are the concrete next steps. You mentioned something coming up in November, but people are saying, you know, what are those steps going forward for that group? What are the kind of scenarios where that might be going? And another thing that's come in, Mardi, which I think is linked for yourself and perhaps Tom as well, it's around, you know, I think it was Geraldine who mentioned the TFND and around nature reporting and accounting right now. And Tom, you know, you're very across all of the amazing initiatives that certain pioneers are doing in this space to sort of account for natural capital impacts and dependencies. People are really interested in what's out there, what can they do today. So I think those are a couple of things. Mardi, perhaps if I can go back to you first on those.
So in terms of what's next, I can't disclose much more than watch for the middle of November for the next announcement and the next paper. I'd be, all of these, you must understand, for all of you that have been talking to these reporting frameworks, this is all very considered. It's a very considered approach we're taking. There's an awful lot of good work out there, and we really want to make sure we get this right. And I don't think 8 weeks between announcements is a terribly long period of time, given how long we've got this together. So, do keep listening. But the next announcement, as I said, there might be a hint there that it's coming out in London Climate Action Week and in the IOSCO and IOSCO speech, also the IFAC letter. They mentioned a climate standard, but there'll be an application of all of these frameworks and standards to reporting climate change. So taking them and showing you how you can do it.
Fantastic.
Thank you. Collective. So that's already been given away. So that's it. So watch for that to come out and then ask questions. And this is a very fast moving, evolving landscape. There'll be webinars around that launch. So get involved in them and get involved. That SASB's conference is shortly after that. The IRC has activities going on. Just watch this space. It's coming along. It's coming fast. On what's out there now related to TNFD and like Geraldine, I'm on the working group for that, and Thomas. I think it's important with the TNFD to consider what's already out there now. Thomas and the Capitals Coalition have got some amazing work already in play for the internal management part. CDSB's framework is already reference and regulation around the world for reporting on natural capital and environmental issues into the mainstream report. So between the Capitals and the CDSB's framework, you have most of a package. I think what the TNFD now can do usefully is to bring the finance sector guidance and perspective to that and fill the gap. So take the 5 standard setters are out there, mark them down, work out what they're not doing, add the Capitals Coalition approach to that, and work out where the gaps are for the finance sector and do that. And that's my personal take on how the TNFD can really move at the pace and scale needed without the inertia. Because when we say we're going to invent, bring something new out, you tend to get going stop and go, oh, well, wait, see what that is, and then I'll do something. And actually, we don't have that time. So I think, the TNFD is going to produce some brilliant, finance sector focused activity. And I really look forward to it, but don't wait for that finance sector activity to come out and say, look at the work of the Capitals Coalition, of Thomas, of CDSB, and the other 5 standard setters, use what they've got and get going.
Great, thank you, Mardi. Thomas, maybe I can bring you in here to a little bit on that nature side and what's out there as well.
Yeah, well, I wouldn't need to add a lot on the TNFD as to what Mardi said. So in the interest of time, and very short, what I would listeners to the seminar here and others that might want to track what's going on, because there's indeed a lot going on in the nature and biodiversity sphere, not least triggered also by the Green Deal generally, but the biodiversity strategy specifically, both EU internationally. I would certainly recommend people that they also have a look at what's going on in the Business and Biodiversity platform, which is one of those platforms where they're trying to bring public and private actors together and basically inspire all the actions going forward. So, and again, natural capital accounting is one component of that, but there's many other assessments out there that are gaining traction, etc. So I would certainly refer people to the Business and Biodiversity platform that is run also by a colleague.
Great, thank you so much. And another question that's come in, and I'm going to put this one together with another, is around, I think we have touched on it, the importance of the just transition to all of this transformation. I think we've mentioned that it's important, and I just want to sort of urge our panelists to help us think about how we can make sure that the social inclusion side, which has been heightened by this X-ray of COVID, demonstrating what, as Diane Coyle put, which I thought was really eloquent, highlighting the inequalities are out there, but actually they're demonstrating how they're being made worse. How we can make sure that we drive the social agenda into what's happening with green, with the range of green issues. But the one thing I want to just finish and ask each of our panelists, if they can, just bearing that in mind, is if you each had a key recommendation for policy and decision makers, national level, EU level, but globally. We've mentioned so many of the different actors in this conversation. What would it be for promoting the education? What would it be to get them to help promote the green finance education agenda? Helen, perhaps I could come to you first.
Okay. Well, if you ask me for just one thing on when it comes to reporting and measurement, I think we do need a global framework with commonality of purpose and language, to bring that all together. And that commonality of purpose would include the social contract that businesses must now have with the societies and economies where they work.
Great, thank you so much for that, Helen. I'm now going to come on to Mardi, if I could ask you the same kind of questions.
I'm not going to say the framework, that's been said, but I'm going to go back to what you mentioned at the start and what ACCF signed. I think the Green Finance Charter, I'm thinking having all of the professional bodies across the world at a global level signed up to a Green Finance Charter and committing to embedding this through in the next 2 to 5 years max, out through all of their education, 5 years at the outset, 2 at the almost the acceptable minimum. I think that would have a huge impact on moving this agenda forward.
Great, thank you, Mardi. Tom, perhaps I could come to you, Thomas, and ask you the similar question for policymakers.
It will be similar to what was already said and what I said before. For me, what is absolutely essential in going forward, global for sure, is that we take things forward through a comprehensive framework, a common logical framework that captures all the elements of the natural capital in a footprint logic and separates that means from the ends, which is all the tools to get to the lower footprint, the circular and all the rest of it. We're mixing things too much up. One last very personal observation, again, since you raised the just transition. What I find, having followed the debate for the last 4 years, and again, that's a personal observation, what governance needs to do and everybody else, if they want to really pursue just policies, is that they need to abandon the idea that nature is a public good. I mean, in the sense, it is a public good, but it is no longer ridden of scarcity. There is scarcity around the natural capital, and that scarcity is increasing extremely rapidly, and we have no means to measure it. So we don't see it, and it will, like COVID, hit many people by surprise. Hence the importance of bringing in accountants, because they can bridge a lot of complex issues into the rooms of decision makers of generalists. That's key for me.
Thank you so much, Tom. And that the better understanding of thresholds and limits into decision making is such an important part of that. Just before wrapping up completely, I just want to come back. Mardi, you mentioned I think what you've just mentioned is a very powerful call, and I think all members of the Charter are really interested in that. I mean, Helen, we're very interested in using the Green Finance Education Charter as a global platform, working with national bodies and others to in some cases it might just be knowledge sharing, in others it might be some capacity building or those kind of things. I think there's a huge role for a body like ourselves to play with that.
Sure. Yeah, ACCA works globally with literally hundreds of partners. Some of them are fellow national accounting bodies, and they're really excited. The good news is everyone is really excited about the Green Finance Education Charter, and I can see huge potential for it to become a global initiative and for national charters to be developed, and for us to take that forward in a very meaningful and quite quick fashion. What I love about the charter, it has specific commitments in it. I've said this to you, Jimmy. Thank goodness we're not signing up to something that's vague. It has very clear milestones that we can achieve as an organisation, all within a 2-year framework. So everything should be in place within 2 years, and I'm sure the profession globally will be very keen to sign up to that.
Brilliant. Yeah, thanks for sharing that, Helen. And I just want to say, so now to just wrap up the panel and say thank you to panelists. But before we sort of say thanks, I do want to hand over. I'm so pleased that we're joined by Joseph Olavi, who is, I I guess, embodiment of everything we've been talking about today. Joseph, you are an ACCA Global Council member. You are a finance professional, but also a green finance professional. You've a passion and commitment to sustainability issues, but also having that critical finance lens, that reporting lens, and understanding how it all takes place. I'm so pleased that you've been able to join us. Joseph, I'm going to hand over to you to offer some concluding remarks on the session today.
Yeah, thank you, Jimmy. Please confirm you can hear me.
Yes.
When I had my role, I thought it was going to be easy, just summarize what everybody has said. But when you have such panel as this, erudite scholars in themselves, it makes your job very difficult. So this is probably the most challenging task I've had to do. But a couple of things moving here and there across the room. Thank you to Ben for opening the session up, but from Heidi up to Madi, Geraldine, and Erling, as well as Thomas. There are a couple of things that I took note of, and I'm sure our 195 at some point attendees would have also noted some of those insights, and I think they are very critical to some of the recommendations that I'll put forward in a bit. The first one is clearly all of the speakers pointed to the knowledge gap. So from Erling, talking about the role of accountants and what ACCA is doing there, and Marty also talking about the skill sets needed to drive us into that green finance era. Geraldine also alluded to some of that, speaking about the buy side and supply side, the financial intermediaries, the banks, investment dealers, and all of that. And the fact that they're not just abreast of what the financial instruments are to help leverage and take us into the sustainable development era. Thomas also talked about that, a lot, speaking to the fact that we need to understand the natural capital, but beyond natural capital, there are also some other methodology scenarios that we need to think about when thinking about, return on assets and some of the technical areas. So clearly, there is a need for capacity building, not just for accountants, but across board. It's a huge ecosystem of engineers that will be working around capturing some of this carbon emissions and all of that, the methodologies that are used to ensure that we provide data that is reliable. So reliability also comes in. So Ellen talks about the role of accountants being able to exercise judgment, scrutiny, bringing all of those critical skills that accountants over the years have developed. So I think for us, clearly, there is a need for massive enlightenment of professionals working in this place, as well as retail. Jimmy, you talked about that. The retail side, the consumers, the customers of the bank, they're not even aware of some of these instruments. So I see a massive opportunity there. And all of our panelists have done justice to that. There's also the concept of tone at the top. I think Marty talked about that. We need, not just the regulators themselves, the governments. Yes, we have the Paris Agreement and all of that, but clearly most of the governments are running behind the targets they've set for themselves. So clearly there's still that need for sponsorship. We've seen a lot of collaboration already with the Green Finance Education Charter, ACCA, and all the professional bodies are part of that, working with the UK government. That's the first of its kind globally, and that's very good. It provides a prototype for other governments, not just in the EU, as Geraldine has mentioned, and Thomas has also talked about that, not just in the EU, but across the world. Even emerging markets would look forward to want to be able to replicate this in their market. So that's very important. The collaboration also with the front runners in terms of non-financial reporting. Madi also spoke about that in detail. I'll not bore us with those details. I think it's critical for non-financial reporting to be able to come with one voice. So I remember about 10, 15 years ago when IFRS adoption was massive across the developed markets, from places like Canada, Australia, even to Africa, where I was born. The critical or the significant issue there was a single set of high quality standards that you could put forward to corporates, to investors, to regulators, as well as the capital markets. So this work, which the CDP the SASB and IRC and a couple of others are working on. It's critical. That collaboration is very, very important to move green finance and the entire sustainability integrated reporting to the next level. And so that's very, I put that under partnership and collaborations. We've also talked about measurements. So across the room, I've heard a lot of talk around having the right methodologies, scenarios, and what have you to drive this engagement. Critical to that also would be the role that the private sector would play. So I know Geraldine's talked extensively about the financial institutions and the finance system as a whole. Heidi also mentioned that the finance system is a critical industry. So the financial institutions are critical to green finance because they are the financial intermediaries. They connect the supply side with the demand. So it's critical that across board for the banks, the central banks, and the supervisors. Good, we have the TCFD. We also have the network of central banks and supervisors for green financial systems. That will be critical. That agenda has to continue to move forward. But in terms of our objectives, let's go back to our objectives when we started. We wanted to ensure that we have an awareness of the risk. What will be the risks towards moving or transitioning to low carbon? We also talked about managing some of the impacts of biodiversity. That was some of the objectives we had for this session. I think the third objective was around the ESGs, environmental, social, and governance impact, and how do we carry the private sector and companies along. And lastly, we had accountability and the impact of that on sustainability. My audience will agree with me that our panelists have done justice. If you look at all of those objectives, our panelists today have done justice to that. So first of all, I want you to go into the chat room and just put in a word there, thumbs up, say some word of appreciation to Marty, Ellen, Thomas, and Heidi, Jimmy, also for helping to deliver this insightful session. In terms of recommendations, I just have 3 recommendations from my experience working in industry, helping clients in the private sector as well as public institutions in Africa and now in Australia. The first one is around capacity building. So again, I cannot overemphasize that. There's a clear opportunity for everyone on this table, the panelists especially, to help drive this agenda going forward. I think it will be critical for us to identify the targeted audience. There will be need to develop tailored modules across board. It won't be a one-size-fits-all. And so that will be an entire industry in itself. People are still not aware, even the ones that you expect them to know. The financial institutions are still lagging behind in terms of knowledge of the financial instrument themselves, or even the technical issues around what a green future or net zero or low carbon economy would look like. So capacity development will be critical. It's good we have the Green Finance Education Charter that's going on already. We also have the collaborations in place, and that will be critical. The second recommendation for me would be around the collaboration. So collaboration, we've seen that already with the major players and not-for-profits that are working from a technical place to help set policies. But we'll need that also within governments. We've seen that with the EU doing that with Geraldine talked about the OECD. And the role of the OECD is critical, especially for emerging markets. So it's good the EU is driving that agenda, and they could, there's a lot of knowledge they could bring from IFRS and all of that. But for the emerging markets, which the OECD represents a good chunk of them, I think that there's opportunities there to collaborate, to take some of the learnings from the EU to those markets. Because they will be critical. Most of the developments happening in China, in India, and some of these other emerging markets are on the back of coal. So we cannot leave that and assume that the emissions there will not be a challenge. So collaboration I've put in here will be critical. The question now is, will we go with a rules-based or a principles-based system? I'll leave that to the audience to decide, but it's good to also note that New Zealand, here on the other side of the world, New Zealand last month became the first country to mandate the TCFD, that's the Task Force on Climate-Related Financial Disclosures, as a country. So if for companies that meet the $1 billion threshold, they are now required to mandatorily report on TCFD. I think that is also a step in the right direction because we need that regulatory bite to get things going. So collaboration, the second one for me. And the third one is public-private partnerships in terms of recommendation. So it's good to have the Paris Agreement. We've seen over 190 governments committing to goals that a number of them, like I mentioned, are still struggling with. And that's where the private sector comes in. And it's good we've got this, this particular session, the Green Finance Platform, as well as ACCA sponsoring this. I believe this is the first step in a number of other agendas to help drive that participation. The governments cannot achieve this alone, from policy setting even to raising some of those funds, the green finance that we need. And that is the role of the private sector. Again, thank you so much to our panelists. And I want to thank all of you. At some point, I was checking the list of attendees. We had about 195, and that should be, I'm sure, across the world, from Europe to North America, Australia, Africa, Middle East, and what have you. So thank you, everyone. It's my pleasure, and thank you to our panelists.
Thank you so much for that brilliant wrap up, Joseph. And I think just one final thanks to everyone on the panel, and also to MEP Hautala and to the Green Finance Platform and Ben Simmons for their support in putting this together. And thank you all for attending. We hope you found it useful. It certainly felt like a brilliant session. So thanks again, panel. Thank you, Joseph, and please keep in touch. Bye, everyone.
Thank you. Bye.
Bye.
Bye.